Welcome back to the channel, and today we're going to be talking about trading systems. And I really wanted to give you guys some perspective of, a couple of different styles that you can adopt and how it could really, take your trading to the next level. Now, when it comes to the styles I have in mind, there's really two approaches. One is going to be what is called mechanical trading, basically very hard set rules. And then the second thing is called discretionary trading, basically opinion based, more you using your experience and intuition. Okay. Now, I'm going to give you some pros and cons to both systems and how I've been able to basically combine the two for what I call my Liberty strategy that you may have seen on prior videos. So let's start off with discretionary trading. Essentially, what discretionary trading is just simply opinion based. And what I mean by that is you're going to obviously have your strategy. You're going to have some confirmations for getting in a trade and whatnot. However, it's going to be a lot of you using your own perspective of the markets and what you're interpreting on the chart to say, hey, this looks like a scenario I'd want to trade, versus a rule based being something where you have very specific things that need to happen on a currency pair or asset instrument that you're trading, that is undeniable. There's no opinion, there's no misinterpretation. There's just a very hard set, one, two, three has to happen for us to take a trade, right? So if you're gonna go discretionary, typically you're gonna be a little bit more experienced. You're gonna really have your strategy kind of ingrained in your mind. And if that is not the case, you definitely do not want to be trading discretionary, right? The last thing you want to do is, put yourself in a position where you're like, oh, I think the market is going to go up, or I think the market is going to go down, right? That typically doesn't bode well. However, if you have, for example, this situation, let's say that you are somebody that trades off of support and resistance or key levels, right? So we can see on NASDAQ, right? 18,250, clean psychological whole number. We see price reacting to this price point many times here, right? And so we say, hey, look, I'm going to be looking at how the market reacts here. If we start rejecting going up, we should see price, maybe getting to this next key level here. We see price multiple times where it kind of pops up. And on the flip side, right, if it goes down, we see the price can get to here, price has pushed lower here, right? So the idea is we may be able to catch a sell at this price point based off of how price reacts to these, again, support and resistance / key levels. All right. Now, here's why I say it's discretionary, because yes, there's a strategy, right? Okay, we're going to be trading around support and resistance areas. We're currently around one, right? We're going to be looking for some other confirmations to get into this trade. However, not everybody may agree, for whatever reason, that this is a good support and resistance area. They may say that, oh, I can kind of see what you're saying, but I wouldn't trade that level, right? There's a lot of perspective and opinion that gets thrown into this area, whether we should be taking a trade off of it or not. You see, so again, somebody with experience or intuition, maybe they trade NASDAQ a lot. They're like, hey, I just have done this too many times. I know that this is a good level. We're gonna go ahead and jump in for a sell here, right? Because we've already seen the market moving lower. Let's go for a sell, and we're gonna put our stop loss from the previous high, roughly about 900 pips, right? 90 points. And let's start targeting, the new lows and this next key level over here, right? And so the setup ends up being, something like this. This is about almost a 4-to-1 risk reward ratio, for example, right? And so, they take a sell here, stop loss at the high, market starts to move, awesome trade, right? Again, I'm nitpicking obviously an example here, but based off of how I trade, I do look for these key levels, right? And I do see that, when price pushes up, we typically, make a move to the next key level. Same thing if we start breaking below that, we've seen the willingness to get all the way down here multiple times once price has broken below here. So that's why I'm comfortable taking a sell there. Now, the reason why I wanted to really shoot this video is because I've noticed with years of trading, especially in the education space, right, helping other people develop the skill set and whatnot, that a lot of people take a good amount of time to be able to build their discretion in the markets to be profitable, right? It's not easy. This is why you'll hear a lot of people be like, oh, well, it's going to take you X amount of time to become successful in trading because it's very hard. Da, da, da. And that is true, right? It will take some time for you to really be a master of a skill set, regardless if it's trading or any other craft, right? You have to understand the rule of the 10,000 hours. However, I also realize the reason for that is because we are using our discretion. And that comes with, having to see the same charts over and over and over and really building up the experience. And there's no way to do that other than putting in the time. However, if we have a rule-based system, I feel like this is the cheat code, right? To at least pushing things, in the right direction a little bit quicker and eliminating a lot of the doubt, fear, confusion, etc., that can come from trading. Right. So let's look at a rule-based system like my Liberty strategy, right? Basically, with this strategy, guys, we're going to be looking at these ranges that form in the market during Asian session, right? And we're going to be looking at how NASDAQ specifically, right? Not Euro USD, not gold, right? Just NASDAQ, how it reacts to this, range and how we can find trade opportunities around that range, okay? So the rules are simple, right? If we break above the high, we take buys. If we break below the low, we take sells. And we like to use a hard set 50-point stop loss, right? Now, here, let's say we start breaking out of the highs, and this is a loss because, price activates the buys, comes down, ends up hitting stop loss here. We have a -1R or -1%, right? Let's say that you risk 1%. Now, if we take the sell right after, because we break the low, we go in for a sell, 50-point stop, targeting 3 to 1. This one ends up smacking profit, right? That is a +3R or a +3%, right? So for the day, 2 trades were taken. You had a -1 and a +3 for a total of +2% gain with the Liberty strategy, right? So that is very simple because somebody doesn't need to have a lot of experience. Somebody doesn't need to use their discretion at all. They simply either set alerts at that lower high, or they can basically put in a buy stop or a sell stop or both, right? On both the high and the low of this range, and they simply let the trade run. And that is the outcome that would have happened if they did that, right? Literally buy stop, sell stop, place the trades, go to sleep, wake up the next day, +2%. That is what rule-based or mechanical-based trading can do. And what are the pros and cons of each thing? Well, I'm going to tell you right now, when it comes to the rule-based, for me, a lot of the pros that come from it are taking ourselves out of the equation for overthinking or over managing a trade, right? I think that, one of the biggest things that causes both profitability for winners and also a lack of profitability is going to be the way that you manage trades, right? It's one of the hardest things to develop as a trader once you understand your strategy, once you've understood risk management, how to mark up charts, right? There's just so many things that tie into the skill set of trading, and one of them is trade management, right? And so rule based really kind of takes the overthinking out of the equation, because again, you're gonna go and buy here, sell here, 3 to 1 targets, boom, right? Only other rule I really have typically with Liberty is when do we move our stops, right? Once we're up 1 to 1 risk to reward ratio, I recommend you move your stops, right? Just to make sure it doesn't turn around on us. So at this point, move stops to break even, right? 1,500 right here, 3 to 1, and you're out of the trade, right? So we moved our stops to break even, we got out of the trade, boom. Now, I want to talk about how we can use discretion mixed with the rule-based system to maximize this liberty strategy, or really anything that you guys may be trading if you're not trading this way with me privately on akashx, right? So this is what I mean. So I think that with discretion, I don't like using it to find opportunities because again, you may not be in the right headspace and you think you're seeing, a good trade on the charts, and you'll end up looking back later and realizing, man, why did I take that trade? Right? That's the only issue with discretion. Unless you are very experienced and very disciplined and you have the track record that shows that you can really rely on yourself to find A plus setups, then by all means, right? But I like to always educate from the perspective of the average trader or somebody that's newer, that's getting there, right? We're always going to have outliers, people that are just beasts in this game, right? People that are just naturally talented, just you're meant to win in the markets, right? But then there are some of us that, we need the help. We need to, practice a lot. We need to really develop, right? And that's the majority of traders. And in that case, we're not going to always make the right decisions if we think that we see a good setup in the market. So the only discretion I really like is the criteria for, once we start breaking out of these highs and lows, should we be actually getting into the trade, or is this maybe a fake out, right? And in this case, this is how we could have avoided this minus 1% loss on this fake out right here, because we never really got any true indication that we were breaking out because we never had any closures of candles here, right? We just saw a wick once, wick twice, one last wick over here, and then price just literally melted down here, right? So there was no, break and closing of this range. For example, if price would have, sat around and then we got a nice break of structure where bodies of the candle were closing above this range, then yeah, we might anticipate that we can continue going higher from there. But we never got anything like that. Instead, prior, we started seeing wicks already. Range got built, we see some more wicks, and then we finally start breaking to the downside. So that is the type of discretion that I think if you mix with a rule-based mechanical system can really maximize the profit. And we're going to show what that looks like in terms of P&L, right? So we break the low here. You can see clearly on the 30-minute time frame that we actually got a clean break of structure here. You see the body of the candles here actually breaking and closing below the low. Unlike here, where we wick, 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 here we get a nice body closure at that point. So that is a real good indication for us being able to validate that, hey, this low right here should be good to go for sells. Again, we have a hard set 50-point stop on this rule-based system. In this case, it works really nicely because it's well above the previous high of the range, and it's even above these highs. So this is a very safe stop loss, right? Now we are going to be targeting 3-to-1s. Now, I'm going to go ahead and also show you the benefits of using some discretion when it comes to not just, making sure that we are entering a good trade and not a fake out, but also how to maximize your profit, because this was a trade that right away proved to be a great trade, profitable trade. And after some time, we see that we smashed through our 3-to-1 target. Now, this is something where I always say, hey, look, unless you're going to be very away from the charts and you don't want to miss out on profits, I wouldn't really set a hard set take profit level. You always want to have a hard set stop loss for the most part, right? But we always want to have an open profit. And the reason why is because we need to see, once we start tapping into our target, how does price behave? Because if we, again, have a rule-based, easy 1-2-3 system, then yes, nothing wrong with securing a +3, right? We take the L earlier. We're still up 2% for the day, right? But if we use our discretion, we're able to eliminate minus 1% loss, right? That 1% loss is now avoided, right? So we are good on that. And then also, instead of taking the 3-to-1, 3% profit here, right? What do we notice? Price really breaks and closes below that 3-to-1 very strongly with a lot of momentum. From there, we can start to look at structure. We see that we have this little lower low, a lower high, and now we're currently forming a new lower low here. Unless structure really starts to break the other way, there's no reason for us to think that we can't keep going lower, right? And this is where, boom, just off of one extra candle, right? Just one extra 30-minute candle. This just extended our profits from 3 to 1 to roughly 4 to 1. So a whole extra percent for just waiting one more candle. And then we'll see that we can even continue to really milk this trade, right? We see that price comes up, and now we form a new low in the market again as well, right? So structurally, we have these highs now, and then we again melt in another 30-minute candle. This has now extended profits to over a 5.5 to 1. At that point, if you really want to get out of the trade, fine, right? Because you are almost double what our original 3 to 1 target was, right? And that is big because, again, one of the biggest rules in trading is you gotta cut losses short and you gotta let winners run. Well, this is a real actual practical way of showing how that works, right? We see that price structurally is still very bearish. We go break through 3 to 1 risk to reward ratio very quickly, and then we have no shift of structure, right? There's no time, even on the smaller time frames, where we see that price has violated a previous lower high and started showing us that it wants to reverse, right? You can see structure is still bearish and it's still maintaining, right? So price continues to come, breaking lower. Again, now we have some new structure to work with here. Now we have some new lows forming. And then here we start to kind of turn around. And that's where the trading week ended, right? At this point, we could clearly see that, this low is being maintained very well here. So that might be a good a good exit signal for you to just take your profits at this point, right? Instead of maybe allowing this to start reversing now. But again, really this extends fully to about a 7 to 1 risk reward ratio. Over here at the last low where we start seeing maybe some reversals, it's about a 5.5 to 1. Guys, even if you just get that extra 1%, right, that covers your next stop loss that could happen on the very next trade, instead of taking the 3 to 1. So this is where I think you get best of both worlds if you're able to have a rule-based system for identifying, is there a trading day to be taken advantage of today, right? Is there a real good entry signal that the market is showing us, right? And then using discretion to simply manage the position, right? As far as, making sure that it doesn't reverse on us, making sure that we protect our entries. And then also observing once we get to our final targets, is there still some interpretation that we may be going lower? And we can go ahead and milk those extra profits. So this is a good system that mixes best of both worlds, that again allows you to find high probability setups. And this is why I teach this to my students within my private mentorship program on akashx. Right. So if you are interested in learning a mechanical based system, right, and also getting the mentorship of how to use your discretion to better manage these positions, I am having open enrollment right now for akashx, right? Description of this video will have all of my links below. Make sure to enroll and message me privately so we can help you guys get started with that. Please make sure to like, comment, subscribe, and turn on those post notifications for future videos, as I will continue to drop value to help you guys become profitable, great traders. So see you on the next one, and let's run it up.